Welcome to EconVerse, a podcast that breaks down the biggest economic trends and current affairs shaping our world. In this podcast, we cut straight through the headlines to reveal the real impact of economic shifts on businesses, governments, and most importantly, on you. So get ready, tune in, and join us as we make sense of the economy, one episode at a time.
Hey everyone, and welcome back to EconVerse. We're going to be taking a deep dive today in India's surprise rate cut.
Yeah.
Okay, let's unpack this a little bit.
Okay.
The Reserve Bank of India, which is India's central bank, basically, they recently made a move that kind of caught a lot of folks off guard.
Yeah, they did.
They cut interest rates, and this is the first time they've done this in almost 5 years. So pretty unexpected, right?
What's really interesting here is they cut what's called the repo rate.
The repo rate. Okay.
Which sounds very jargony, but it's basically the interest rate at which the central bank lends money to commercial banks.
Okay, so like the banks that we all use.
Exactly. So by lowering this rate, the RBI is essentially trying to make it cheaper for banks to borrow money.
Okay.
In the hopes that this will then lead to lower interest rates for loans that, regular people like you and me might take out.
So the chain reaction.
It is.
Lower repo rate, cheaper for banks to borrow money. Hopefully that means cheaper loans for everybody.
Exactly.
Maybe it'll finally be a little easier to buy a house or start a business.
That's the hope.
Okay, but why now? Why this sudden move?
Right. Well, the simple answer is that India's economy has hit a little bit of a rough patch.
A rough patch, how so?
Well, GDP growth, which is basically a measure of the country's economic output, has slowed down significantly. In fact, it's reached a 4-year low of 6.7%.
Oh, wow.
And the RBI's own projections for the rest of the year aren't exactly painting a rosy picture either.
What are they saying?
Well, they've actually downgraded their growth expectations for the year. They're now predicting 6.7% growth overall.
Okay.
It's a pretty noticeable drop from their earlier, more optimistic forecasts.
So I'm trying to think of a good analogy here. It's almost like if you're in a car and you see that you're slowing down, you want to give it a little gas to try and speed back up. Is that kind of what they're doing with this rate cut, just trying to jumpstart the economy a little?
That's a good way to put it. They're hoping that by making it cheaper to borrow money, people and businesses will be more likely to spend and invest, which should, in theory, help boost economic activity.
Okay.
But, as with most things in economics, there's a balance to strike.
Oh, yeah, for sure. So what about inflation then?
Right.
Because if loans are cheaper, won't that just mean that people are going to borrow more, spend more, and then drive prices up?
Well, that's definitely a risk. It's something that the RBI is watching very closely. I mean, the goal here is to stimulate the economy without letting inflation get out of control.
It's a tightrope walk.
It is a tightrope walk. The good news is, at the moment, India's inflation is relatively under control. It's kind of hovering around the RBI's target of 4%, which gives them a little bit of breathing room to make this move.
Okay. That's good to hear. But, we keep hearing about this neutral stance that the RBI is taking. What does that actually mean, like, practically speaking? Are they just going to wait and see what happens after this rate cut? Or are they kind of looking for specific signals that might tell them, okay, we need to take more action?
So neutral in this context basically means that they're being cautious. They're not committing to any specific future actions just yet, and they're really closely monitoring how things play out.
So the million-dollar question is, what are they watching most closely?
Yeah, exactly. Well, for one thing, they're definitely keeping a close eye on the global economic landscape.
Oh, absolutely, yeah.
And let me tell you, it's been anything but predictable lately.
It has been. There's a lot going on.
A lot going on. Trade tensions, the potential for tariff wars, political instability in certain parts of the world. All of that is adding a lot of volatility to the mix.
It's making things pretty uncertain.
Very uncertain. And these global uncertainties, they create a real dilemma for the RBI. Because if they cut rates too aggressively and the global situation takes a turn for the worse, well,
it could be a problem.
That could spell trouble for the Indian rupee.
So it's almost like they're trying to navigate a ship through a storm. They need to keep a steady hand on the wheel and just be ready to adjust course quickly if things get choppy.
You got it. And speaking of global uncertainties, there's one concept I think that's really crucial to understand here.
Okay.
It's the idea of flight to safety.
Flight to safety. Okay. I've heard that term before, but I'm not sure I fully grasp it.
Okay, well, in this context, it's actually a pretty straightforward concept. When investors around the world start to get nervous about the global economy, they tend to pull their money out of riskier assets. and they park it in safer havens,
Okay. Safer havens like what?
like U.S. Treasury bonds
Okay.
or gold,
Got it.
things that are seen as more stable. And that movement of money from riskier assets to safer assets is what we call a flight to safety.
So it's like when things start to feel shaky, people just retreat to what they perceive as the most stable option.
Exactly.
Makes sense. But how does this whole flight to safety thing affect the Indian rupee?
So if global investors become more risk averse and they start pulling money out of what are considered to be emerging markets like India, well, the demand for the rupee decreases.
Okay.
And that can lead to a depreciation of its value.
It's like a domino effect.
Yeah.
Global uncertainty triggers this flight to safety,
Right.
which puts downward pressure on the rupee.
Exactly.
Okay. And I'm assuming that a weaker rupee can have all sorts of other consequences for India's economy.
Oh, absolutely. It's a whole other can of worms.
I bet.
The global economic landscape feels very unpredictable right now. Yeah, it really does keep you on your toes. And remember, that unpredictable global backdrop is partly why the Reserve Bank of India is being so cautious.
What's that?
They made this one move with the rate cut, but they're really being careful before they jump into anything else.
Right.
And that neutral stance is really all about staying flexible, being responsive. But we shouldn't lose sight of why they did this in the first place.
Right.
Why cut rates at all?
Yeah. What are the potential benefits here? Like for everyday people, for businesses in India?
Well, one of the most immediate and tangible benefits could be that borrowing costs will go down.
Okay.
Lower interest rates generally translate to cheaper loans, and that's true for both individuals and businesses.
So if you're thinking about buying a new car or maybe finally getting a mortgage, this could really make a difference.
Absolutely. Those monthly payments become a lot more manageable.
Right, yeah.
Big purchases become more attainable. And it's not just about consumers. Think about businesses that are looking to expand their operations or invest in new equipment, hire more employees.
So this could really encourage businesses to invest and create jobs.
Exactly. It could be a big domino effect in getting the Indian economy back on track. But, economics is rarely a simple cause and effect scenario.
What do you mean?
I mean, there are often delays, complexities involved.
So like wouldn't lower interest rates pretty much automatically lead to cheaper loans?
Not always that straightforward. I mean, one thing is there's usually a lag time between when the RBI makes a move and when the impact on lending rates is actually felt. Banks don't always pass along the full benefits of a rate cut to their customers right away.
Right, they have to think about their own profits and stuff.
Exactly. They got their own calculations to make. And then there's also competition within the banking sector.
Right.
Even if the RBI kind of nudges things in a certain direction, individual banks are going to be watching each other very carefully. If one bank decides to hold back on lowering its rates, others might follow suit.
Oh, so it really is like a whole ecosystem.
It is. It's not as simple as flipping a switch. There's a whole dance happening.
Between the RBI and the banks and the people who need the loans.
Exactly. But the potential benefits are significant.
Okay.
Lower borrowing costs could really give both consumer spending and business investment a nice boost.
Which is what the Indian economy needs right now.
Exactly. But of course, we can't forget about the elephant in the room, inflation.
Right.
The RBI is very aware that if you stimulate the economy too much, that could lead to inflation. If demand surges too quickly and it outpaces supply, you can see prices go up. And that hits everybody's wallets.
And nobody wants that.
No. And so the RBI's projections on inflation are really important here.
Right.
They're currently forecasting inflation to stay pretty close to that target of 4% for the year.
Which, as we talked about before, is relatively good.
Yeah, that suggests they have some room to try to boost growth without having to worry too much about runaway inflation. But those global uncertainties that we keep talking about, those could really throw a wrench in the works.
Yeah, because even if things are looking good domestically, a sudden spike in oil prices or something could really change things.
Oh, absolutely.
Yeah.
I mean, those external factors can have a huge impact.
Right.
Oil prices, commodity prices, currency fluctuations, it's all connected.
It really is like a tightrope walk, isn't it?
It is.
Trying to balance growth and keeping inflation down, all while dealing with all this global uncertainty.
Yeah, you got it. And that's exactly why the RBI is staying so vigilant. That neutral stance isn't about being inactive, it's about being flexible. That's a wrap for this episode of EconVerse. If you enjoyed this episode, make sure to subscribe to the podcast on Spotify, Apple Podcasts, or wherever you're listening right now. And if you're watching on YouTube, don't forget to hit that like button, subscribe, and turn on notifications so you never miss an episode. We'd love to hear from you. Drop a comment on YouTube or leave a review on your favorite podcast platform. It really helps us reach more listeners like you. Thanks for tuning in, and until next time, stay curious, stay informed, and keep exploring the world of economics.